is Justin Pulitzer. This is my midweek video for Wednesday, February 23rd, but since it's being recorded after midnight and everyone is going to have to see it now on the 24th, I will call it for Thursday, February 24th. Sorry for the late filming on this. I had a little medical procedure today that required anesthesia. Don't worry, I'm fine. And that ran 3.5 hours past my appointment time. So I got a very late go on things today, unfortunately. Anyhow, let's get to it. So coming into the week, we had pretty poor sentiment, and I would imagine with the efforts that are happening in Ukraine right now, that sentiment is even worse. So yeah, there's this, the 35% bad sentiment, and then we have crappy sentiment with money managers as well. No surprise there. I think the numbers, if you took them now, would probably be even worse. There is an old saying, I think it's attributed to Baron Rothschild, and he used to say that you would buy on the cannons and sell on the trumpets, meaning you buy when war starts and then you sell when the war ends. So we will see if that old adage holds true. I saw some charts today posted that a lot of people were gaming that as well. Interesting, we've been saying this for a few days now, but is what it is. And there is a lot of historical data to back that up, so we'll see how that goes. First, let's get into some of the indicators we watch. Interesting to me today that the market was making new lows even ahead of this news, but the VIX really wasn't, yeah, it had a pretty big intraday reversal. It held that 27.18 level, 27.20 was the low. That's kind of been my pass, don't pass line I've been watching. It was sort of this gap fill level where this spike stalled. We had found support where we collapsed from, and we've been kind of futzing around that level. Only toward the very end of the day did the VIX really kind of get percolating, and I'm watching in the overnight. This may change because I am expecting probably some lower lows in the overnight. We'll talk about that. But even with the news, we're not past the last high in the VIX. It is up 10%. That's a pretty big jump. This is the VIX futures, but not taking out that high. And even if it does, we may run into some channel resistance. So we'll see what happens. But I did think that was a little interesting. TLT, potential higher low. We were down today, which I think hurt the NASDAQ, obviously. Everything seems to hurt the NASDAQ lately. But we fell out of this diamond pattern, which we were kind of predicting. Found some support, a little overshoot, and now rallying a bit. The question is, are we going to be able to get back up over this old... This was the crash low for where the Fed kind of panicked. And we'll see if that the 20 MA can clear and the downtrend, or if we're just popping up the trend and a check back to the old breakdown. And if it fails there, that would be an area that had been prior support. It may wind up being some resistance now. That's still to be determined. I was looking at the dollar, and that's also starting to perk up a bit here, which is obviously not good for global profits or, S&P companies, but this has been a trend for a while. Nice W pattern on the bottom. I wouldn't say this is a cup and handle, although it may form one here. This would be a pretty funky, gnarly looking cup. We did have the look above and fail, pulled back. I said I didn't feel comfortable saying the dollar was done until we lost the 100 MA, and that has certainly not happened here. But interestingly enough, the dollar still hasn't broken out just yet. It still may, but kind of hanging in there. Bitcoin has not acted well at all. Oddly, because gold has been acting well, but Bitcoin not acting so well. No, it sure hasn't. So a few things to note. One, we bounced back up to a key level, kind of an area of where we had broken down from, and now we're coming back like the market to test the lows. You know, Bitcoin is still kind of young, so it's hard to tell what it's kind of a proxy for, but I'm starting to think, at least based on my, you know, excuse me, understanding of the charts here, it's sort of like a early warning indicator for NASDAQ, and maybe a little levered on the upside and the downside. Primary trend does come in, but it's a S-ton lower, if you know what I mean, if we're using adult terms. Last reference low was 32,855, and then the 28,880, and then depending on how long it gets down there, it could be into the 26,000s, and there's a bit of a gap fill here from 23,670. That could be a level that might come into play at some point. So keeping an eye on this. If, you know, Bitcoin turns, it usually leads to a rally in markets. So I think this has become a very interesting early indicator that, you know, we may want to, you know, pay attention to. So keep that in mind. I was looking also at gold, because gold is actually doing what it's supposed to do. Although it's interesting with the dollar strength, I think people are just kind of reaching to gold because it's kind of what's worked, and or maybe people are buying what Putin's buying. That could be the case too. So let's keep that in mind as a potential there. So I'm watching a couple of things with gold. You know, there's always some recency bias. What happened the last time? So here we have this bottoming pattern, little bit of a W. Here we have the same kind of move. And from the low from 330 all the way up to the high here on 6/1 was a $21.30 move. If we tack that on to the low from 929, that would take us up to 182.27. Close to reference highs, probably a good area to start pumping out longs into. I also think that there's some good area up here. We had talked about this, the channel high, which comes in around 180, and let's see, actually we're a little over here, so it'd be like 180.38. We're a little above there by about $1. So anytime here, I don't mind trimming a little into. Could animal spirits take over and us get one of these kind of crazy ramps? It's always possible. Remember, we were on board for this early. I think, I don't want to say I got lucky, because it wasn't lucky. There was nothing really lucky to it other than the speed of it working right away. But remember, we bought on right before the move started really getting going. Anyway, so I do believe it's probably a good idea to start booking some profits into strength here. You know, if you didn't buy lower, this is probably, you know, the area to maybe start trimming profits and maybe even raising stops into, you know. I had a subscriber ask me to discuss this, and I guess we could go back here. This XME, this is a metals and mining. We're back to a prior key level, probably a good area to maybe trim a little into here. It did just break out, but it's a little tenuous here. I would use the, it's dealer's choice here if you want to use 47.85 as a stop or 48.51, but I like trimming a little bit of profits and just raising stops. I mean, if it's a look above and fail, you'll probably come back to the lower end of the range. If it stays above here, it can keep going. So very, very simple setup here. It's got to stay above 47.85. Let's take a look at oil. All right, so oil is obviously percolating because of the situation with Russia and Ukraine. I think we get 7% of our oil from Russia. Interesting number. I was looking at this is a weekly chart, though. We don't want weekly charts. We want daily. So we have a little situation here of a breakout. So I think the key level for me that I'm watching, two things. On the upside, if we get the 2 times range, that's 109.08, and the 2.618 is 123.71. if we start losing 95, 82, and really more important, I'm just kind of watching like 95, and then I think you got to pull the ripcord if you lose 95s. That's my take here. 94, 95, 95, that area, that to me is the stop. Anything above there can continue higher. Below there could see a pullback. As far as XLE goes, I'll be curious to see how these trade tomorrow, because in the end, these are just stocks, but they are oil related. This is a big reversal, and then we kind of had an inside day on Wednesday. So I think you got a very clear setup. Anything that's below 66.95, and then more importantly, 65.94. I'm going to put an alert there. 65.93, we'll say. I think is a short. But if we get above the Wednesday high, I think you could probably trade it long back up to 70.37 maybe. So above 68.16, obviously with a stop below 66.95, or you could use the close of 67.64. Again, dealer's choice there. Yeah, so there's that. I just noticed I left my little VX note out there. So let's take a quick look at the ES. It's trading in the after hours here. Obviously, these numbers aren't correct. No, they are correct. I was going to say the value area numbers are not correct, but we're after hours, so there are no value area numbers. So we're very well below VWAP. Obviously, sparked on the news. I was chatting with actually with the big girl. We were texting, and I was at dinner. Had a very nice little steak dinner tonight. Probably not the best after you've fasted for more than over 24 hours. It was almost like a day and a half, but it sounded good, and it went down. It went down very well, I'll tell you. So this was the big dump candle on the news. We were already down at the close, kind of trending lower. I think everyone kind of knew. Vladimir Putin. I know he put out this very ominous, message to the West. Don't interfere, you'll suffer consequences you never imagined possible, or whatever. But you have to take a look at what he did. This wasn't a sneak attack. This wasn't a surprise. It was a well-telegraphed move built over months. I think that, he may be talking tough, but he doesn't really want a showdown with the West. I think he wants to see how far he can push Biden. And I think Xi is watching very closely, because he may either imminently or maybe after November, when he re-ups, he has to be reelected, even though he's sort of like president for life. But he does have some pretty strong opposition, actually, against him, oddly enough, from people who had been in power, who want to be back in power. And you know how those dictatorships kind of work. All's good one night, you're dictator for life, and then the next day you wake up and you got 36 bullets in your back. It's kind of crazy world over there. You kind of live by the sword, you die by the sword. But we'll see. Xi's a pretty smart guy. He's obviously looking to expand China. They want to take over Taiwan. And I think he's going to watch to see what the response of the world is here. So far, it's been very, it's been a little passive. I really actually had thought Biden's sanctions the other day were pretty good. But then when you read the fine print, they weren't. What he said at the podium wasn't really what happened. He's talking about cutting Russia off from debt markets, and he was talking about sanctioning oligarchs, but he didn't mention that it's only new debt that's issued after March. All the old debt can still trade. And he didn't mention that the oligarchs he put on notice were sanctioned or already sanctioned, and now he just put their kids on there too. So, this is a little bit of a little joke. We'll see if he goes further. I'd like to see them take Russia off the SWIFT system, but that's a whole... Anyway, we're getting into a little conversation here. So a few things to note. One is there's an old, like I said, again, at the beginning of the video, old saying by Baron Rothschild, who was a very interesting character. I don't want to besmirch anybody, but, he wasn't the most savory of people, but he was a heck of a trader. Look back, if you're interested in these things, look back to his escapades with Napoleon. He claiming Napoleon had won a war and hadn't, and he panicked the markets, and when the markets tanked, he bought it. No, he knew the news, that Napoleon was defeated, but a very, very genius guy, who to come up with something like that. But I'm watching a few things. One is if we're going to form like an inverted head and shoulders where we're going to make a lower low in the overnight and then kind of come up, make a higher low, and then kind of run, or if we're just going to, run from here, or if we're going to fall apart. But for me to really get excited about a potential for a sustainable rebound here, I'd like to see it over the dump candle high, which may be some resistance now, because this is where we were kind of floating around. You got to think everyone who bought futures here at the 2.618 extension, which makes some sense, right? There should be some support there, may want some of their money back. So I think that area, at least initially, will be some resistance. But if the bulls can get price back up over there, maybe we have a tradable low, at least for a little while. I will be a little leery if we rally too much into the open, because up opens have gotten schmackarooed, particularly when there's bad news. So maybe down opens get bought, or on these days, maybe down opens get sold even more, right? But I'm going to stick to that for now. We'll see. This was, again, very well telegraphed. I think everyone kind of knew about this. My garage attendant knew about it. So I use them as a little bit of a foil once in a while. They're an interesting gaggle of gentlemen down there. But this is kind of the levels I'm watching. So in ES, I'm looking to see if the bulls can get back up over 41.8475, so 41.85. And then in the NASDAQ, if we're going to go apples for apples, candle for candle, that would be 13.342. I could even make the argument it's 13.417 quarter, but if we go 2200 hours, those are the candle highs, so I'm comfortable using those. All right, let's take a look at SPY. So a few things to note. I'm recording this at almost 1 in the morning. It's 12:59, so round it up to 1 a.m. Overnight lows already have taken out these levels. Look where we closed today. We came right back down to the January lows. So the January low, if you remember, had been a look and below and fail of the October low. And now, are we going to have a look below and fail of the January low, or are we just going to keep dumping? Because we do have a kind of a prominent head and shoulders. I had talked about this bounce and the potential for building out a right shoulder, which a lot of people didn't seem to agree with, but we did. And we had the opportunity here. We had one chance here at 2.9 to really kind of break out, and then the next day it was just down, 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 and then a couple day bounce. This again looked like we were going to maybe have a higher low, but it was just a check back to the backside of the channel, which we had discussed at the time. And now boom, 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 down it again. So I'm looking to see a couple of things. Number one, the overnight low so far in SPY, as of this video, is 411.60. We're trading pretty close at 413. 410.86 was a key level, and then if you do the 2.618, where we may ultimately wind up going is around 404.48. There's also, if you look here, we did overshoot a bit. There are a couple of gap fills down there around 400.61, 396.33, and then the really big breakout we had was at 394.17. So this could be an ultimate range that we may go down to, but it doesn't surprise me kind of where we're stopping. This is sort of the end of a big volume distribution. So usually those attract buyers. If they do break, usually we do break down to the next one, which again, I said, you don't see a lot of volume coming in down until 394. So there could be still further to go. But short term, if we do get a buy the cannons opportunity, maybe we rally back, to test back into this 420.76 to 426.36 level, which had been prior supports, which now may become resistance. we'll see. It's also the neckline kind of this breakdown. So usually what'll happen with a head and shoulders is you'll have a break. It usually isn't just one day, but I have seen it and you'll rally back, and then either, it'll fail, where it'll be a look below and fail. And if that does happen, we have a whole other conversation to have, which I think we'll have in the weekend video. But if it does fail, we could come back down and look at a couple of more ranges. Now, I had originally, there's a couple of things to note. These 2 times range isn't the head and shoulders I had talked about, by the way. This was just this like mini range from the upside here, and I just projected them down. So I think that for now those are okay targets to use. But if we're gonna get can't even believe we're going head to head. I can't believe we're doing this, Goose, right? The 2 times range is down at 370, 274 of the head and shoulders. So we're gonna have to see how much gumption Mr. Powell and company have here, if they're going to keep pressing on an already weak market, and if they're going to, go through with, hiking interest rates into, a global growth slowdown, and now, a potential for some trouble. Russia, China, Iran are all, causing trouble. COVID is kind of actually not so good in China right now. It's running pretty wild in Hong Kong. We got to see what happens with the Fed, and then more importantly, some of the things that I've been discussing with some people, you guys too, I've been doing it in videos, but in private, is, we're getting bad responses to good news. Like if you see earnings companies that report good numbers, they pop, and then like either the same day or, the next few days, they kind of give it all back, and then even some more. And then like ones that have bad earnings, they go down hard, and they have like these breathtaking drops, and then they just keep going. There's seemingly no buyers. So it's not a very healthy tape that we're in as of right now. And I'd like to see some of those things change. Either we don't respond badly, obviously, to good news, but maybe we start responding okay or better to bad news. So I'm sort of the opinion, if we rally into the Fed, we could dump hard on the Fed. But if we're down hard into the Fed, maybe we kind of have a bit of a relief rally. Maybe they, assuage markets a little bit. I would think that, they've been hawkish up until the point, but when they actually pull the trigger, they're going to try and maybe soften the blow a little bit. So we're going to see. We're teetering around, and even now in the overnight, through some pretty key levels. So you do have a pretty well-defined, confirmed top, and we're going to have to see if the bulls can muster a rally and get back through the old support. If they can, we're talking about maybe a move back up to the upside, maybe even up to the right shoulder high, back up to, I don't know if we're going to go all the way back up to 56s, but maybe maybe the 200 MA, I would think, 45s. That certainly could be possible, and maybe even back, I would think 39s to 45s, but that's a whole other conversation. Right now we're dealing with, the down move, and if we're going to get, a responsive move back up. The expected move in SPY for the end of the week was $8.41, but we'll see if that expands now, if we get range expansion or contraction. I would imagine, I personally think that there's a good opportunity to cover some shorts here, so you might see some rally. We'll see, but it is Thursday now, and we'll see what the appetite is like on Friday, going into a weekend with uncertainty. Could be a little postponed relief, or maybe things will get worse. We'll see. Interesting with it's funny, the Russell, which is the biggest piece of junk out there. I am such, I don't really ever express my view on the Russell, other than, I don't trade it that often, but when I do, I do. But I have very little respect for the Russell. I think it's kind of like a junky little index that gets a lot of, it gets more than it's due. But I will say this, the Russell has not taken out their recent lows. So, everyone always wants to say the Russell is a harbinger of things both up and down, and now it's not going lower. So maybe it holds here. And if it does, maybe we get some kind of a bounce. We shall see. Expected move here is $4.79, and the overnight low is 188.20, I believe. Yes. So still a little bit above the last low. The DIA. Expected move is $6, but that obviously is going to change around. All these numbers were pre-dumpage. But some interesting things. One is the DIA, the low was 323, and if you go down to here, you're like 326, so it's just a little bit below there. These things don't always stop on a dime, but we do have a falling wedge pattern here, and we may find a little bit of support there. 320.04 was a kind of an interesting breakout area. I wouldn't say it's a huge support zone, but it is one to note because there was this kind of like back and forth there. Like 311 is probably a little bit more. Let me take a look. I mean, you're not really talking about big league support until like 286s, 289s, which would be the full triangle fill from the down from the old all-time highs, really, 295. I don't know if we're going to get all the way down there, but it's possible as an ultimate target. We also have the head and shoulders here. The neckline, I mean, I guess I could use 340, but it is really kind of like a slanted head and shoulders here. These are the harder ones I have seen them pulled off. And when they get pulled off to the downside, they are super ugly. I mean, really ugly kind of stuff. But they're harder to pull off, and they often, frustrate or wind up, going down, and then like kind of back up. So let's see where we open. I think overnight low. The key, really, I should have said this before all of these. Maybe I'll do it in the NASDAQ because I know everyone's going to watch that one. So hold off with. We'll discuss that when I do NASDAQ, and I won't forget. Just to show you something. Like Home Depot, for example. I mean, this isn't a biotech stock or anything, but like for example, Home Depot had been on channel here. Right? And it was right around the 200 MA. Granted, it was the second check back to the breakout. So they reported a number that was not bad, but I guess not as good as the street wanted. And boom, down huge. Another, like multiple days down big. I mean, it kind of looks like the move that, happened in Facebook, and we'll talk about that shortly. There is a gap fill here at 302.61. The old breakout here, it's a little, I would say it's a little undefined, but you could say 292.95, but really this like 278 to 280-ish area, 284s. If you look back into the volume distribution, there's a lot of muscle memory there. And this, don't forget, was sort of gonna be the down part of of what was becoming a downtrend before the breakout. So I do think that if we do wind up getting down there, there could be some interesting support. It's also the 50% fib of the entire move. So I'm eyeing that area. I should actually set an alert there. 280.62. Last at or below, and I'll say row long. Maybe even just for a day trade if we were to get down there. But there should be some muscle memory. If you want to sell like out of the money puts, the full retracement from this move is the 61.8. So if you want to sell like 245s or below 246s, that was an old reference high from back in the 2009 level. Remember, I said that we might be looking to retrace all these levels. So I think that if you get down to 280 and you think you might get a bounce, or maybe that just is the end of it, or you want to begin at like a little position, maybe sell like 246, 247 puts. There could be some juice if we do get some VIX pops. We'll see. The VIX might be a sell the news opportunity where it kind of deflates. But if we do get it like an elevated VIX, use it to your advantage and kind of do those kind of things. And wow, these charts are taking a long time to load. I guess there's a lot of people on the network here. So I mentioned before India, but I know more people watch the, if they jump around, they watch the Qs. So I decided to discuss this here. I'm watching a few things in the market. One is the overnight lows. And in the Qs, by the way, that was 319.99. And I'm looking to see where they, that might not be the ultimate low in the overnight. It's possible we go lower. But I'm looking to see where the market opens in relation to the overnight low. Is it above or below? Where the opening 5 and 15-minute candles are, and can we rally? Like, for example, if we open higher than the opening, let's say the opening 5-minute candle starts above the overnight low, we could see a rally if we get above the high. If we get below the low, it's possible we'll retest and maybe even go below the overnight low. So I'm looking at that opening 5 and 15-minute candle to maybe base some quick trades off of. Now, as far as where the Qs are, this is a lopsided head and shoulders pattern. Like I've said in a few charts here, I've seen them resolve higher, oddly enough. They're harder to pull off, in my experience, to the downside. I have seen it happen, and like I've said in prior analyses, when it happens, it's really, really very ugly. So there's a few things to look at here. Number one, immediately, we're kind of at like a bit of a wedge low here. There was a gap fill at 322, and we're hanging around there now. There's also some reference support here at 316. I'm just curious if we scooch over, and this study I'm using here is called Volume Profile. There's a pretty big spike here, so that might hold it for a while. I've also discussed a few things where we had this big market. This was a big market top for a while at 303.5, and I think that area would provide a lot more support if we were to somehow get down there. Now, a few things. The Qs today broke the January support and actually kind of closed on the dead low, and I thought that this could be an opportunity maybe for a bounce back, at least to the low, or maybe even a look below and fail, because we had the look below and fail of prior lows. I'm not so sure that that's going to be the case here. We may wound up rallying, and we could be kind of like just chopping all the way down. If we were to go back, and I don't want to, assume that this is going to be the case, the 2019 peak was 237.47. I've seen bigger crashes in the NASDAQ before, and I don't necessarily know that that's the case. Again, I'm sort of the training of, you buy the cannons, meaning you buy the invasion and then sell the trumpets, the end of the invasion. So we'll see where that, how that analysis takes us. But as of here, we are coming into some, interesting levels where we could potentially see some bounces, this gap fill level, that we're hovering around now. And then if we were to dip a little bit lower, maybe even into the 316s, that area to me looks like it could be some support, because I notice when you, kind of go down, and this one isn't perfectly symmetrical, there are often, it kind of goes down. The move down often looks a lot like the move up, with the humps and stuff. And that's where the Elliott wave analysis comes in, and so on and so forth. In my experience, I know this works for some traders, but for me, the Elliott wave thinking often is sort of like a rear view mirror, like it's obvious after the fact. I just use channels and horizontal levels and measured moves and just, gap fills and volume profile and stuff like that. I think that they're just easier to kind of chart out in real time. So we're coming into some very, very critical levels here in NASDAQ. It probably is due for a bounce, if we're going to maybe check back to the 338 level. That was a really big level. That to me would be an upside target, and probably an area to maybe sell into if you're going to sell some upside calls. That's a level, or I don't know that we're going to get back to 350, but to me that would be a really amazing short if we were to get back up there, because you got a very big volume profile there, and this was a big area of contention for a while, and it's it's really truly the horizontal neckline as opposed to the the more diagonal one, I suppose. But we could be in, this situation where we're chopping for a bit here. Expected move in the Qs is $8.21, and again, the overnight low as of this recording is $319.99. How are we doing on time? Not too bad, actually. I thought it could be worse. XBI, I'm just going to do a quick little analysis on this one. This is getting into an area soon that I've been looking to maybe buy the dip into around 74. I'm going to try and sell like 62 puts. I don't know what we'll get when this opens, but it may even just get all the way down there. I mean, that would be 100% retracement, but you got to think biotech isn't going out of business because there's war in Ukraine, So this kind of area, I mean, I'm looking to start to nibble into. It's been down a lot. It's pretty ugly. I was looking at this ARK today. Kathy Wood, I mean, it's amazing to hear her talk. I mean, even Kramer's breaking on her now. It's bad when Kramer's breaking on you. This is all the way back to the 2019 high. So this was an area I thought that we may find some support into 58s, 09 to 63, 60, 73. And if you do the big 2 times range for her, that's down at 52.80. So if we were to get down to 52.80, it might even be worth just for a trade, a bounce play maybe back to like 60 or 64. So I have my alert set there. I should probably get rid of this one. Not really that interested in buying it right here at the moment. But Kathy Wood, I mean, she's retraced it all. It's all gone. The whole real rally. I mean, I guess you could say it was from 33, but the breakout over the highs here really is all taken back. It's amazing to see, but I think she has herself to blame, unfortunately, for a lot of that. With being so prominent. Coin. This was something I almost put on today. Thank God I didn't get filled. Right, I'd be probably really pissed in the morning. I'm curious to see if this can hold the reference low, because coin is really not that expensive. I was looking at coin and, I was talking with the big girl about this and she's like, could you buy some stock, think about stocks that have profits. And I'm like, yeah, I'm like, Coinbase is profitable and they're less than 15 times earnings. And they got to think that crypto is a real deal. I mean, even on the downside. But this, of course, trades with Bitcoin and Ethereum, and it'll probably be weak as long as they're weak. Right or wrong, that it doesn't really matter. That's how it trades. I'm just telling you. So the big question to me is if it can hold this low, or are we going to make fresh lows? And I also, when I was talking about this trade, didn't realize that they're gonna have earnings. I'm glad I actually didn't put this trade on because I didn't realize at the time, because I was only on mobile, I wasn't on my desktop, which is also one of the reasons today I was very, very light in my trading. I did very, very little today. I sold a put in Gilead in my an IRA account. I may have done it over a few accounts. It's usually not one, usually not just one with me, but I sold a small put in that. I think I literally did maybe like 1 or 2, and then I did. I bought a couple hundred shares in a few. What were they? Let me look at my fills. They were very little today. Oh, that's not good. All right. Oh, all right. It's after midnight, so it's not showing. Damn it. It was PML. I know it was PML and PGF. PML is a municipal bond ETF for the high yield, and PGF is preferred stocks. So that's showing you how much I thought of buying the dip today. It wasn't, and even though, and then a little QYLD. I did a tiny little buy in that. That's covered calls ETF on like the FANG stocks. I just figured they were so bad, and NASDAQ was down, so much. that, it wasn't a terrible trade location, but that won't move nearly as much with the market. I've noticed it'll probably be down a little bit more tomorrow, but I have wide levels on those, and that's part of a longer term income plan. It's not really so much my trading account, but I take opportunities like, for example, like when SPY, if we get like a VIX up to 50 in SPY, I'll sell something like, another $100 out of the money put. And then, if I get stuck with shares $100 down, I'll buy it. It's sort of, buying in scales like that. So opportunistically, I do things like that. All right, so coin, I'm looking to see if it can hold or not. I'm going to wait probably till after earnings, because this kind of, I hate to say it, and I'm sure I shouldn't say I'm sure of anything in this market, but this play honestly looks a little bit like some of the ones we've seen that have been down into numbers and then get clobbered again. So, and with, like I said, with the type of market we're in, where good news, the rallies are short, and the bad news, they get completely splammed. It's just better to wait. I don't know if she owns Airbnb, but this is getting close. I was talking with the big girl about this today, actually, too. She was chatting me up today. I think she was worried about me because of my endoscopy colonoscopy duo today. That was a really crappy day, and having fasted for so long. Anyway, I had said to her I was waiting for a fifth day. So 1, 2, 3, 4, and 5. Maybe tomorrow this is already past earnings. We know they had good earnings, but they're giving it all back. I mean, this doesn't surprise me, though, with this one. It's, these newer stocks that IPO'd, didn't really, have a lot of backing, I think. And they just trade wild. But the lower end of the range roughly has been like 130s. I guess 121 is the all-time low. This one obviously is not a profitable one. It's got a pretty negative, shitty PE, to be honest. But I do think that there will be some kind of a reopen play when weather gets warmer and people aren't focused on churches in Kiev for 3 hours. So this one might be worth doing some kind of a put spread if there's a gap down and we get into those reference levels, because they did have good earnings, and I do think that they have a bit of a brighter future. But so Tesla, wow, this is loading so slowly tonight. Tesla, I had mentioned that up over here during the Rivian IPO, I had said that this is a good area to book profits into, and when Musk was selling and the channel high, it was just very obvious to me. The one fake out I had on this, and I got out right away, was day one of the new year. When this broke the channel and was up so strongly, I was sort of like, they're going to make a run for the high, and it didn't, and I was promptly stopped out. And when I get stopped out, I get pissed, but I'm glad I never got back in. Anyway, this chopped around for a while, but it was obvious to me that it was going to go lower. And, it's unfortunate that it damn, I wanted to move the 50 MA, but I can't. So it's unfortunate that, stocks like this, they kind of flash out. They always have the best news, and they kind of suck in the most people at like the wrong time. Like Rivian, that IPO was ridiculous, and that got pumped and pumped and pumped on TV. And I told all of you to just stay away from that. And I'm so glad we did, because the stock has been killed. So the 200 MA was a key spot. The 61.8, it bounced up. And I had mentioned here when it was sort of holding over 900, I was like, just don't own it if it loses 900, and now we're down in the 700s. The channel low is a little bit lower, and the 50% move of the prior range is roughly around 719.95. The 78.6 of the entire move in this kind of breakout zone was 696. So there probably will be some support here. Would it really shock me, though, to see Tesla down in the 500s again? No, it really wouldn't. To be. I know that sounds terrible, given the fact that it's down so much, but it really went parabolic from these levels here. So I am thinking there could be some support here, and I'm going to be very interested to see how this one trades tomorrow in particular. I'm going to be looking at all of these. A few of these. Tesla is going to be one. Apple, that I was mentioning today during the day that I thought looked vulnerable. And I've told you for a while, I'm worried that this, I shouldn't say worried, I'm actually not worried at all, but it would benefit me actually if the stock went down. But it's right on the back, like it broke the 100 MA. This was the old support, and it took a few days the last time to kind of resolve. And here I saw it like teetering, and boom, it went through it. So the next big level is like 157.26 and 154.70. On a big down open, will Apple get there? Yeah, I mean, probably. Apple will probably also fill this gap at some point, maybe even quickly. So if we were to, like, for example, gap down to like 150, I doubt we're going to get that big of a gap down on Apple, but, you know, stranger things have happened. That would be channel low, the 200 MA, and the last really another big breakout. I'd be interested in that for a bounce play. Other than that, I don't really see a big need to own Apple, like, longer term, other than tactical trading, until it can get back up over the 100 MA, which was clearly has been the support. I mentioned up here, I mean, even up here when Apple was strong at the channel high, I said that this was a great area to sell, that I thought Apple would be respecting the channel again. And I remember tweeting out, I was like, what news is going to get Apple to 200? I just didn't see it. I still don't. I know they're coming out with some new products. I know that they're going to be nice and cool, and that's all fine, but Apple usually moves on iPhone cycles. The best news Apple has for it is that it's finally getting oversold, oddly enough, in the money flow, which is crazy, because the stock isn't, I mean, compared to some of the other ones, I mean, Apple down $20 is not, you know, down 40%, you know? So just keep an eye on this one. It could play some catch up to the downside, but it's at a very, very key spot here. I do think that the 200 MA and the 150 area is probably going to be a bounce play, but I don't really, I'll get excited on Apple. Like, where would I load up and start buying in, like, my account, like, for longer term plays? 137.98. That, to me, the 100% retracement of this entire move and the big breakout. If we can get down there, I'll sell some big OTM puts. I know a few people were talking about selling, you know, some out of the money puts on a big gap down in that. Yeah, that's fine. If you don't mind owning some Apple, that's fine. And it's, you know, is Apple, let's see, what's Apple's PE? 26 times back. I mean, yeah, it's not, I mean, it's a little high, but it's not, you know, crazy compared to some of the other ones. Amazon is just acting terribly. This one was good on earnings, and then it stalled at the 50 MA. We talked about a quick day trade here above these highs to the 50, and then it got down to the 20. It was trying to hold, and here we go, collapsing. Looks like they're going to be filling in the gap. I didn't think their earnings were really all that amazing. They were, they were good, but they weren't like, you know, rock star. But I think it's just the market we're in. Honestly, I think if we were in a good, you know, a better tape, Amazon probably would be, you know, knocking on the door of 3,400. But we might get another move down. It's clearly going to fill the gap here. So I think that's, I mean, if we're talking about, I don't know if we're going to get the full fill, but it's certainly possible. On this tape, anything is possible. I think, again, you know, just we're at a key spot here, this 28.88. I'm very curious to see. I mean, it was a little lower after hours. We'll see where we open, but the bulls really have to get back up over 28888. That, to me, if you've been following me for a while, this has been a very big level, and anything below there puts the big long top in play. You know, that this was a big long rounded kind of top, and anything below there, I mean, the stock could go, you know, a lot lower. I mean, you're talking about maybe revisiting, you know, some two-handle type of, you know, lower two-handle type of numbers. And maybe even the, I don't want to get crazy here, but, you know, maybe it even sees a 1 at some point. But 21.85, 95 was the real breakout here. That could be in play if we're below. I'm just going to keep it simple. Anything below 28.88, I'm a little leery. 2,700 obviously was the last swing low, so I guess you can use that kind of buffer zone. It's a big dollar stock. but it's really got to get back up over and hold. Otherwise, we all saw what happened to BABA when that happened. I don't think Amazon is nearly going to take the beating BABA did, but you know what I'm saying. Google was a gap up and crap. I nibbled a little bit. I haven't been adding, and I've just been kind of watching. Very, very little. I almost forgot I had it. That's how little. But it's coming into almost 100% retracement of the entire move. It may even be there by now. No, not quite, but we'll see. Google actually did have a pretty good quarter, and they have the split. The quarter wasn't amazing. I know a lot of people, and we had the look above and fail, and now it's kind of back down to the lower end of the range. So this is probably going to be a buy area, I think, for at least for a bounce, and it's oversold. And they have the split coming up in all the way in the summer, though. It's not so good. I think that's why it's been weak. I think if the split was sooner, it would have held up longer. Netflix, I hate to be a killjoy when I was going to say JoJo the circus idiot, but in this instance we'll settle for Bill Ackman. Was buying Netflix, and now we're back lower. So yeah, this to me now looks like a failed check back of the channel. And how low can Netflix go? Could it get down to 250? Maybe. There's some triangle fills around. I think 300 is probably in the offing. 291. What was this low? I actually am kind of bullish about their some of their upcoming slate with the Stranger Things and stuff. But the stock just got, I think, a little bit sporty. As the late great is he still on, Dennis Garman? I don't even know. But 32 times earnings. It's a lot, on this tape. I mean, you got Facebook that's trading at less than 15 times earnings now. I mean, that's unbelievably cheap, and that may still even go lower. We'll see. But we're going to definitely be retesting the lows. I mean, obviously, this is stronger than the market. I find it encouraging that the FANG names have been stronger than the index. That's always good. So, a little relative strength, but not that amazing. ROKU, very interesting move the last couple days. It looked like it was going to kind of make a move for the gap, but we may fall back in. And if it is below, and it is, not after hours, but we'll see tomorrow. It'll be interesting. ROKU will be up. You'll see ROKU will be up tomorrow. Anything above 116 is still okay. Below there, I'd be a little careful. Okay, and then the gap fill 20 MA zone would be the end range for that bounce if it happens. Disney is on my list too, because I'm not a big Disney fan. I really am not. I did play it long into earnings, but I got out, and now I'm kind of thinking that this is a reopen play, and it's also kind of a it's a loved stock. Money managers just love this stock. So if it gets close to 140 again, I might start to nibble. We'll see. It's right on the 20 MA, which is kind of key. But, if it starts coming back to where it was, on the gap from the Netflix move down, I might start nibbling on Disney, Disney, what's their PE like? Oh, wow. I didn't realize Disney has 86 times earnings. That's a little nuts. I might not be nibbling on Disney then. Maybe just for a trade. I'll end on Facebook. So this has been interesting, to say the least, because it's already met the decline percentage-wise and timing numbers. I've been trying to get it over a prior day's high, but it just won't cooperate. That's okay though. I have a small nibble in this. I had a feeling that it would get down to these levels here, maybe down to 194 where the gap fill is, and possibly even down to 162. That would be pretty frickin' ugly. There's a couple of ways of drawing trend lines. I know a few people were talking about this one here, and that would take you down to the 162-ish area. I wouldn't I wouldn't put it past the realm of possibility, but I mean, Facebook is cheap. I mean, you know, they usually say a normal market multiple for stocks are 15. This is below a market multiple now for Facebook. So, you know, they got a lot of money in cash. They're going to be doing buyback. All you need is an activist, or I shouldn't say even an activist. You just need a big name investor to kind of get into this, and I think the stock will turn around. Like not Ackman, like Carl Icahn or Buffett maybe, or someone. That's all you need. Even if Zook starts buying, 190 is a big level. I think that area may be some support. You know, give or take around that level. But the stock has been pretty ugly. I mean, other than the one-day bounce after my analysis, you know, it's going down. And I told you at the time I didn't like that, you know, Kevin O'Leary and, you know, all the wrong people on TV were still liking the stock and, you know, not, you know, had been long or trying to buy the dip. It's a little problematic for me. But 190-ish seems to be a big level. I think that roughly around that zone should be some support. Some of this is going to, of course, depend on the market. You have a very, very big, let me show you, volume distribution here coming in. So this zone, there is volume all the way down to like 182. So I do think the buyers in Facebook they might not be right here, but they're getting close. So I don't mind starting to nibble this, particularly if it's down kind of big on the open. Anyway, have a great rest of your week. I know it's a tough one with war and all that. It's never fun. But I'll see you for the weekend video. And if you have a chance, please like or, you know, heart and retweet the video. Cheers.